Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, XAU USD gold. And first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. Now, today in the gold price forecast, we have seen that the bears have kept an eyes on the $1,654 per ounce threshold ahead of the Fed confluence detector. Now, the gold price is back in the red zone as U.S. Treasury yields see a renewed upside. Hefty federal rate hike expectations bolster the yields and the U.S. dollar. XAU USD BS target 1,654 and $1,651 per ounce as the downside resumes. Now, gold price has stalled its two-day recovery mode from 29-month lows, but remains within a familiar range between $1,680 and $1,650. Investors refrain from placing any directional bets on the bright metal ahead of the Fed and BOE rate hike decisions, which could have a significant impact on risk sentiment and the US dollar valuations. Now, the Fed is widely expected to hike rates by 75 BPS this week, although a slim chance of 100 BPS rise still remains on the cards. Aggressive global tightening bets weigh negatively on the non-interest bearing gold at a time where the US Treasury yields are surging to a multi-year highs across the time curve. Gold prices toward the key levels. We can see the technical confluence detector shows that the gold has bridged the Fibonacci 61.8% one-day support at $1,677 per ounce. Bears are now geared up to test the Bollinger Band, one day lower at $1,664 per ounce. The previous day's low of $1,660 per ounce will be the next downside target. Further south, the previous week's low at $1,654 per ounce, and the pivot point one day support 2 at $1,651 per ounce could come to the rescue of XAU buyers should the selling momentum pick up steam. On the flip side, the $1,672 per ounce hurdle could into play once again. That level is the confluence of the Fibonacci 38.2% one day and the Fibonacci 23.6% 1 week. Now, the previous year low on $1,677 per ounce will offer steep resistance on the road to recovery, above which bulls will challenge the previous day's high of $1,680 per ounce. And what to expect for this, of course, a breakout of this resistance zone means a push up to the upside. From $1,683.22 per ounce, we are looking out for $1,695.90 per ounce. Of course, this is good money from this entry point. Now, that's our technical analysis from today's currency pair XAU USD gold. Now, let's move over to the stock markets. Right now, today on the stock market, we're having a look at Coca-Cola. And we have noticed that Warren Buffett's Berkshire holds these two high-fuel dividend stocks and U210. And long before becoming the oracle of Omaha, 6-year-old Warren Buffett was an entrepreneur selling sticks of gum and Coca-Cola to earn money. And, by the time Buffett turned 11 years old, he has opened his first position, paying $114.7 for City Service, a natural gas company founded in 1910. Now, but if the position was being held, we should have noticed that not being enough time in the day to sell Coca-Cola on the side, investing in it, and another high yield dividend company. Now, Coca-Cola is offering a dividend yield of 2.82% of $1.76 per share annually, making quarterly payments with a dividend king track record of increasing its dividend for 60 years. Coca-Cola, of course, is the largest non-alcoholic beverage entity in the world, owning and marketing some of the leading carbonated beverage brands such as Coke, Fanta, Sprite, as well as non-sparkling brands, Minute Maid, Georgia Coffee, Costa, and a lot more. The company has been dipping into two of the alcoholic beverage and, of course, area with Jack Daniels and Coca-Cola, of course. Now, this, of course, has been having much impact as U.S. Bancorp is offering a dividend yield of 4.00% of $1.84 per share annually through quarterly payments with a strong track record of increasing its dividends for 10 years. U.S. Bancorp is one of the nation's largest regional banks with branches in well over 20 states, primarily in the West and Midwest in the U.S. as of 2021. Now, what to expect from this? We are noticing a push up to the upside at 61.10. And of course, we are seeing at a stronger resistance point there, and most likely a breakout of this resistance point will mean it pushes up to 63.15, which is about 23 pips, 25 pips thereabout. And an extension could mean maybe at about 65.25, which is 50 pips from that entry point, of course, which is good money. So if we were to make an entry from this point and let our trade run down to that point, we're looking at nothing less than 50 pips from that trade, of course, which is good money. Now, that's our technical analysis on today's stock market Coca-Cola. I remain your host, Nick. Bye for now.